Welcome to Module 4. In this module, we're going to discuss the overall trading plan, which covers all the strategies there. We want to keep everything at a high level, and we also want to keep everything simple. So we want to put everything in this generic template of a trading plan so we know exactly what to execute over and over and over for all the different strategies. Here's the roadmap for all the strategies. This is the thought process you're supposed to go through. Notice it's short and simple. That's the only way you create habits and trade with no emotions, is to create a simple trading plan. And that's what we've done here. So this is the trading plan for all the different vIMTF strategies. And let's start to go for it. Here's a strategy here. Once you have a strategy, you now can place the orders, which is at the blue dot, the red dot, and the blue cross target. Then on the next bar, you're looking to enter. You only have the next bar you could enter. You cannot enter 2 bars later, 3 bars later at all. There will be no entry dots. So what happens is whenever you have the strategy, on the next bar, it'll print the entry dots and you have to enter on that bar. If you don't enter, you're going to cancel the orders and you're going to go back to looking for new opportunities. If you did enter, you want to see if that bar was profitable at the end of that bar. Not during the bar, but at the end of that bar, you want to make sure you're profitable. What does that mean? That means you have to close above the entry, bullish entry for bullish, or you have to close below the bearish entry for bearish. If it is profitable, now you have success on the entry bar, which is the first bar, your entry bar. If you have success on the first bar, you're now going to wait for the second bar to come in. At the end of that bar, you're going to look at the V close. And for bullish trades, you want to make sure that the V close is now above your entry. For bearish trades, you want to make sure the V close is below the entry. If it is, you can proceed to the next step, which basically means you pass the second bar. If the V closes are not correct for that second bar, in respect to the entry, you're going to exit that trade right then and there for a minor loss and so forth. Okay? If you pass the second bar, you're now going to look to adjust your stop. If you're a conservative trader, you're going to take your stop and move it to the entry so it's a free break-even trade. If you're aggressive, you could change your stop to the red dot, which is already there, so you really don't even have to do anything there at all. And through the trade, you're going to carry that red dot as your stop. Okay? Once you adjust your stop, you're now in the third bar. You're now in what we call trade management phase. This is pure trade management now. Your goal is to stay in this trade until the blue line disappears. Okay, on the third bar, the blue line will start to print. Only on the third bar, because you passed bar 1, passed bar 2, and on the third bar, after you adjust your stop, the blue line will print. You're going to stay in that trade until the blue line ends. You'll always look at the end of the bar, not during the bar, because during the bar, the blue line could come and go at will. So at the end of the bar, you want to always see the blue line is there. If it's not, you exit the trade. If it's there, you can keep on moving forward. If the blue line is there, at the end of the bar, if the bar is a black TNT bar or an orange bar, you could adjust your stop to the TNT high or low. Okay, that is your option based on being a conservative or aggressive trader. If you reach the target, you have an option to take all your positions off, 50 to 75% of your positions off, and so forth. In this generic trading plan, we're assuming you're going to take 50 to 75% of your positions off, and 25% of the positions are going to stay. So you're going to repeat this trade management module over and over and over until the blue line disappears or you get stopped out of your existing stop for a profit. Once that's done, you're going to exit everything, and now you're going to start all over. This now concludes Module 4, which goes for the overall trading plan. Remember, This is an overall trading plan we just discussed for all the strategies out there. The goal is find a strategy, enter. First bar, you want to be profitable. If you aren't, you exit. If you are, you move to the second bar. On the second bar, for bullish, you want the V closes to be above the entry. Or if you're bearish, you want the V close to be below the entry at the end of the bar. If it is, bar 2 passes. If not, bar 2 fails, you're going to exit that trade. If bar 2 passes, now you're going to adjust your stop if you want, and now you're in trade management. In trade management, you're going to stay in that trade until the blue line disappears or you get stopped out at your existing stop. Your stops also you could adjust when you have a orange or a black bar. You could adjust the highs and lows of that bar once you get a T&T or reversal bar. If you get to the profit target, then you're going to take 50 to 75% of your positions off. And that's it. That is the trading plan for all the different strategies out there. And that's what you're going to execute over and over and over.